is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. We are in Christmas colors and we wish everyone a very happy Christmas and a very happy Christmas week. A great year ahead. Festivities in CNBC, you will shortly see all our guys celebrating Christmas Eve. But for the moment, good morning, Sonia. It does look like it's going to be a slightly tepid day. Yeah. I mean, the global indices have not been helping. The US index took a huge dip and we kind of presaged it. Asian markets today are not able to rise from it. It's not a big fall. Kospi is down 0.14 and the Chinese indices are down. But half of them are not trading. Nikkei is not trading. Australia is going to be truncated. Philippines and Indonesia are not trading. So we have, we have red on the screen, but it's not a very deep red, I would say, especially when you look at Kospi. And for us, the big advantage, as we all know, is crude going down all the way to $53. That's some Christmas fuel for us. So even if there will be red in our screen, it will be much less than global indices. So it appears. And then we've got our own fuel. I mean, GST rates cut, not by a whole lot, but that's a little bit of a fiscal stimulus. Crude is a big stimulus. Election spending is always a stimulus in India. So my sense is that we may find some green after all.
Well, I hope so. I mean, after what happened on Friday, it looks a bit disconcerting. You know, a lot of levels have been breached. As we ring in 2019, the mood is that of uncertainty. You definitely have to say that. I mean, look at that. The Dow was down 415 points, down 7%, the worst week in the last 10 years. Domestic institutions also sold quite a bit on Friday. So we had a selling of almost 500 odd crores. The gross selling has gone up substantially by domestic institutions. And, you know, I think the biggest worry about what happened on Friday in closing bell was that a lot of large caps saw selling. So there was 450 crores of delivery-based selling in Infosys and TCS. There was 500 crores of selling in HDFC. And of course, I mean, those are the negatives. The important part is if the Nifty reclaims that 200-day moving average. The 200-day moving average is 10,766. We breached that on Friday. If we close well below that this week, it's F&O expiry week as well. Let's see, the SGX Nifty is indicating we'll hover around the 200-day moving average. But if we close well below that, then, maybe we could see further pressure. But Lata, it is Christmas week. It's the last week of the year. Before I ask you how, the macros are stacked up, what are you going to ask Santa for, since it is Christmas tomorrow?
Well, I would ask for a government that works next year. I mean, we had a government with 335 seats in the previous election, and that government had about, $60 average crude price for at least 4 of its 5 years. I don't think we have made a big match of it. Whatever the shape of or color of the government that comes, let us have some peace and let's have some progress. We've been waiting for that 8% growth that hasn't come. Hopefully, Santa will give us that in the next year. The earnings kick-off that we were expecting for, let that come next year.
Okay, so that's for next year, peace and progress. But let's have some fun as well, right? It's the last week of 2018. We're allowed to have a little bit of fun. So let's do one thing. Let's take a quick look at what our wise experts have to say this morning, and then we'll kickstart the show. GV Giri of IIFL lists out their India strategy, where he says, given the number of uncertainties in the calendar year 2019, they are focused on bottom-up stories rather than taking a sector-specific stance. IIFL has chosen all-weather stocks, which they are confident entail improving fundamentals or continuing strong earnings momentum, even in uncertain times. Their top picks are HDFC Bank, Axis Bank, ICICI Lombard, L&T and Biocon in large caps, and Aarti, Apollo Tyres, Chola Investments, IEX and Mindtree in mid caps. IIFL rates Cadilla, Lupin, Ultratech, Bharti Infratel and United Spirits as their top sell calls.
Okay, but that's a long list of buy calls also that they have. Let's get you money market views. Comes from one of the biggest bankers, B. Prasanna of ICICI Bank. He says, in a deteriorating risk environment, global market focus has shifted decisively to the US economy's specific risks following dovish FOMC outcome, partial US government shutdown, change in US military response in the Middle East and cloud over US Fed Chairman Jerome Powell's continuance. Prasanna says the given environment calls for caution in emerging markets. Even though rupee has got additional tailwinds from sharp fall in oil prices, he expects volatility to remain high in the coming week. He expects the rupee to trade in the range of 69.90 to 70.80. Now, this is extremely important because remember, we got a big dip in crude prices on Friday and the rupee weakened. So, you know, there is a limit up to which the rupee strengthens when crude falls. But after a point, the rupee also becomes a victim of lower global growth concerns.
Okay, well, on the bond front, V. Prasanna adds that the current global risk environment remains supportive for bond markets in general. On the domestic front, even though tailwinds have increased following a sharp fall in oil prices, the fear of fiscal slippage post the latest GST rejig and more populist measures in coming weeks ahead of the general elections may upset the apple cart. Prasanna says the rupee and oil price volatility may also add another dimension to local bond markets. He expects the 10-year benchmark bond yields to trade between 7.24 to 7.37% this week.
And finally, it's over to Mangalam for the world view and very important things happening in the United States.
Absolutely. Very, very important things happening in the United States. It's Christmas. The color is red, but however, not the kind of red that the investors and traders would like. Dow Jones at one point was up by about 300 points and ended close to 415 points lower. And with that, it's posted the worst week in the last 10 years. In fact, the US markets are likely to post the worst December since the Great Depression 1931. So in last week itself, the Dow lost about 1,600 points or 7%. Similar was the cut that we saw on the S&P 500 and NASDAQ too, down about 8.5%. All the frontline indices down 20-25% from their record highs, and this perhaps could be the reason why, because Donald Trump said the Democrats whose votes they need in the Senate for the border security might not give their consent, and if at all there is a no, there would be a shutdown in the government which would last for a very long time. That is something that spooked the street, and which is why we saw the big decline on Wall Street. But jumping across the wall, across the Atlantic, the European markets, they were mildly in the green off lows, but no great shakes seen in the European markets as well. Big mixed moves coming in the emerging market space. Asian markets, a large part of them are shut today. So the Nikkei is shut today. The Hang Seng as well as the Korean indices are sitting with cuts of about 0.9 to about 0.2%. Shanghai mildly in the green. Important to know for our markets, crude oil prices briefly below the $54 per barrel mark, right now hovering around that. That's a positive. We have corrected on Friday's trading session. So today the SGX Nifty, which was indicating a red start, has now moved into the green by about 14-15 points.
Okay, thank you very much for that, Mangalam. I know important cues there. But guys, all of you out there who are working despite it being, Christmas Eve and a holiday between two holidays, we have a Christmas gift for you. We have a very important guest joining us, Arvind Sanger, Managing Partner of Geosphere Capital, with us in the studio. Arvind, back in warm India to escape the cold Christmas in the US?
Right. Holiday time in India.
Okay. Well, okay, let's get straight away to the heart of the problem. I mean, the US problems just seem to be abounding. You have, a possible government shutdown already, growth worries. Do things get as bad as Jerome Powell getting fired? Because the Senate has to agree.
I think it's probably not likely, although with President Trump it is impossible to say what's unlikely given everything that has gone on. But it seems like that would be a very emerging market thing to do, where central bank governors resign or are forced to resign or are kicked out. I don't think that that's constitutionally or otherwise something that we've seen before, and I don't think the market would take kindly to that. And remember, the rate decision was unanimous. So unless he cannot fire all the governors because a lot of the governors are appointed by the regional banks, the way the U.S. Fed is structured. So just changing the chairman is not going to change the tone of the Federal Reserve, where there's an FOMC, the committee that meets and that makes a decision. So I think that's...
But procedurally, it requires the Senate's approval.
Procedurally, there is no precedent of there ever being something that the president has the authority. The appointment of a new Fed governor requires the Senate's approval.
Okay. Arvind, hi. Greetings of the season. Good to see you here. Yes. You know, Lata was telling us that when I asked her, what do you want for Christmas? She said, I want a stable government that will use the macros to their advantage. What do you want for Christmas?
Well, I think I'd like a little less volatility. I'd like a little more common sense prevailing. And you know, I was at a dinner a couple of days back in New York, and there was a very good China expert. And when people have been bearish, and I've known him for a few years, when people have been bearish on China for the last few years that I've been with him in conferences, he's been the bull and saying it's not that bad. And it was the first time I heard him that China slowdown was much more serious and severe than he had ever seen. And so I think this is really, the U.S. is probably the least concerning in terms of growth. It is really, you're seeing these problems in China. You're seeing all the sales coming out of the UK because the Brexit fear is very bad. You're seeing parts of Europe looking bad. And the US economy, government shutdown doesn't really affect the economy. I mean, the government, like most parts of the world, the businesses do fine. It just is a more confidence thing. So when you have a president who is somewhat unstable and his defense secretary is leaving and he just fired him early when he was going to leave at the end of February, he decided that he was leaving at the end of the year, or when he was leaving on February 1. So, these kind of things, and the government shutdown flip-flop where President Trump was going to be fine with signing a bill and not. So it's the uncertainty, it's the that creates more insecurity. And I think what we like is more policies, certainty. And that applies to India, which it looks like there's a bidding war now for who can give more free handouts, which is clearly not going to be good for the long term.
Well, that directly brings us to the key question we wanted to ask you. India has a very big tailwind with crude falling to 53. It's also less of an export-dependent economy, and that's what people believe, though we have always gone down when the world is shrinking. Secondly, we have election spending. I mean, you may call it giveaways, but during election quarters, there is a lot of spending. Do we stand out as outliers as the world worries about growth?
Well, I think there's a lot of positives for India. You mentioned a couple of them. I think clearly oil prices, low oil prices are here to stay as long as shale productivity remains as good as it is. I've spent a lot of time in the last couple of weeks talking to shale company CEOs and executives, and it's clear that shale companies in the U.S. are overwhelming any cuts that OPEC can do. So that productivity is not coming off. So oil prices are likely to remain in a stable, lower level. And the other thing that I think is important is that you're right, India is less export dependent. So as long as the world is not going into a recession and going into a slowdown, there is one other structural benefit for India. Again, talking to this China expert, one of the things that has become clear in talking to the CEO of one of the major global Indian tech companies, US company, it is clear that global executives are looking for diversifying the supply chain on a structural basis, and that this is irrespective of whether in February or March U.S. puts new tariff or not. This is more a long-term strategic concern that the U.S.-China relationship is fundamentally altered for the long term, and that gives India a great opportunity to take advantage of it. So again, my only concern is India is, unfortunately never missed an opportunity when it comes to global trade. And this would be a great chance for India to take advantage, low oil prices, benign environment, and global executives looking for an alternative source, and India could take advantage. So all the slogans about Make in India could be actually made to come true with some strategic thinking by the government or allowing the private sector to do what it can and providing an enabling role in that. So I think India has some tailwinds that could be interesting.
Okay, the operative phrase is strategic thinking by the government, maybe the new government, whichever comes.
So the winning phrase was never miss an opportunity to miss an opportunity.
But the other thing the central government has recently done, I mean, a couple of positives, infusing liquidity into PSU banks, and now the GST rate cut on 23 items. We don't know what more they may announce in terms of populist measures, etc. But from a foreign investor standpoint, how would you read into some of these happenings?
Well, I would say that, when I look at, what's happening in terms of the populist measures, it looks like, loan waivers is the mood of the moment.
Yeah.
again, I wish there were more strategic thinking, because the only way that you're going to get farm incomes better is by moving a significant portion of the rural population into urban jobs and industry. In the meantime, all you can do is give palliatives like minimum support price higher, and you can do farm loan waivers and what have you. So yes, we will take advantage of that in terms of equities that will benefit from that. But from a long-term structural standpoint for India, it does nothing. It doesn't solve the fundamental problem of farm productivity. Too many people with too little acreage. Acreage is not growing. Number of people are growing. So productivity per capita has to come down. So you have to solve that problem by moving people. So I think, in the short term, there will be that spending. There will be that capital indiscipline, spending, fiscal indiscipline. There will probably be money coming out of the RBI funding that. Now, RBI is probably overcapitalized and can give that money, but it would be better spent to take that money from the RBI and recapitalize some of the PSU banks, which is what I think some of the people have been suggesting, or doing something else more structural. So the real challenge for India is, how do you bridge the short-term populism with long-term structure? And that's where, I think the equity investors are used to middling growth, India growing at 7% plus or minus. And I think even in a $54 oil price environment, maybe that's the best we can hope for.
Okay.
If we did something structurally, we could get much better.
Oh, yes, but India moves incrementally. Just a small advantage is that all these farm loan waivers ultimately don't end up being as big as they are announced. I mean, the previous farm loan waiver, the giant one of 2008, started with a promise of 72,000 crores, ended 3 years later. 3 years it took for the money to go, 53,000 crores. So, okay. By the time you identify, there is always a cutoff, there is devil in the detail. So I'm hoping that it's not going to be as big a negative as the political noise makes it out to be. But that debate for another day. I wanted to ask you about the Indian growth story itself. I mean, we've seen companies like L&T, Cummins showing better orders. There is a private capex that appears to be kicking in. Mm-hmm. And we've waited for 5 years with an earnings famine. It seemed to click a little bit, at least in the first, and in some companies, the second quarter. You think we've got something good going in terms of growth? I
think so. I think the cyclical forces are finally coming into play. The GST digestion is behind us. That you don't get the easy comparisons from the GST implementation, but you get the more kind of normalization of the economy benefits. You get the lower oil prices. I think India is seeing what we're seeing globally, which is inflation is completely dead, and in India it's extremely low from historical standpoints. So therefore it gives RBI room to cut, and that provides again more easier money for businesses to invest. And if demand is growing, then it provides the incentive for them. So I think that there are many factors coming together where India is, in one of your earlier questions you asked, I think India is sitting in a sweet spot, again assuming the world is not going into a recession, but is going into a slowdown, and China's slowdown and global trade slowdown are not headwinds for India.
So at Geosphere, how are you guys approaching India in 2019? Are you putting money to work now? Are you waiting for post-elections? Or are you raising cash levels? I mean, what's the approach?
No, we're looking to put money to work. We're not making big macro calls, but we see now the global headwinds. Our central call on a global basis is not for a global recession. Okay. Although the risks have grown. We have to be careful that we can never say never. But we think that Indian companies that benefit from a global supply chain, there are some companies that are already seeing demand for that, from people diversifying out of China. There are companies that would benefit from that. We see that interesting. And we see some of the domestic, more rural-oriented demand stories benefiting from the spending. The NBFCs, as the liquidity conditions ease, you could see some opportunities.
You'll pick some of them?
Well, one or two which look very interesting. We're looking to buy those, yes.
Okay, well,
just this final question may not have anything to do with markets, but it may have a lot to do. The US retreating from Syria and Afghanistan, I mean, there's going to be a sudden vacuum over there. I don't know, is this going to be a geopolitical hotspot? Will that be the black swan of 2019?
I don't think Syria or Afghanistan are strategically in the short term, that big a deal for the US. But long term, I think the concern has to be, if I'm South Korea, Trump has talked about, why do I have troops in South Korea? So which of the other allies says, I don't trust the US anymore under President Trump, whether they're going to have my back or not when I need it? And if that becomes a situation...
France is already saying that about Syria.
So if that becomes a case, then, does everybody start developing their own nukes to protect themselves? So there are long-term strategic implications which are highly negative for US retreating. And, one of the things that the US has not retreated from is the Middle East major oil-producing countries like Saudi Arabia. But as US becomes, in the next 2 or 3 years at the rate shale is going, US is going to become energy independent. And if US retreats from the heart of the oil-producing region in the Middle East, guess who's really screwed? The free riders of the world. The free riders are the Chinas and Indias. They have benefited from the US leaning on Saudi Arabia to keep peace and to keep oil prices low. If US doesn't care, whose economy goes into a tailspin every time oil goes up? So the free riders of the world will have a problem if the US retreats from that. That's a long-term concern for people like India they have to worry about.
Let's hope it's not a 2019 worry,
no, it's not.
But it's a new world order. Thank you very much, Arvind, for dropping by. You really made our Christmas week, and hope you have a great one in India as well.
And you're not going to be doing a white Christmas this year. I mean, are you going to miss it?
I'm not going to miss the...
No, you're not going to miss the cold.
It's a warm sands of Goa, perhaps, that you're headed to. Thank you very much once again for joining in.
Thank you.
All right. Well, we have to take our break, but before we do that, let's pay homage to former Mumbai sheriff and eminent jurist, an eminent Mumbaiker, actually, when you come right down to it, Nana Chudasama, whose banners have been a must-read on Marine Drive for years, a humorous look at everything that happened to the country. We remember every one of those banners that Nana Chudasama put out.
Santa Claus is coming to town, and guess who is most excited? The CNBC TV18 research team. Here we are, all of us Santa's elves. It's not just me and you, Lata. Our entire team is excited.
Absolutely, absolutely. Some gift for working on Christmas Eve.
Oh, yes, definitely.
So we thought we'd light up everyone's lives.
All right, we're not going to, I promise you, we're not going to roam like this the entire day. It's just for now. So let me go straight across to Mangalam first up, the first elf to tell us what's on his radar this morning. Mangalam?
I'm watching out for a lot of these movie exhibition companies, Sonia, not because we'll be watching a lot of movies in the holiday season, but over the weekend there was news coming in from the GST Council where the rates on ticket prices sub 100 rupees have been reduced from 18% to 12%, and for ticket prices above 100 rupees, which constitutes for majority of the ticket sales for PVR as well as Inox Leisure, have been reduced from 28% to 18%. Let's see whether these theatres pass it on to the customers or not. If they don't, it's bad news for us, but good news for those companies. For PVR separately, there was a board meeting in which they agreed to raising about 750 crore rupees as well. And generally, the third quarter or this month itself is good for all the film companies or the film exhibition companies. We had 2.0, and the last weekend of this year we have Simba as well. So box office sales are expected to be good given these blockbusters. So expect some green, contrary to the cap that I'm wearing right now.
Okay. Yes, a lot of green. We are just in red and white to celebrate Christmas, so nobody's going to holding that against you. Sonia, a minor benefit from the GST cut in retreading tyres?
Yes, I'm going to try and sound serious, although I don't feel that serious with this hat on. But, the tyre stocks, I expect some of them to be in the green, and here's the reason why. There is positive news coming in for organized players. There's been no change in the GST rates on new tyres, but rate cut has been announced on retrading of tyres. Now, what is retrading of tyres for the uninformed? It's a process through which we can use our old tyres, and it's a method in which the worn casing of the tyre that it generally has a good structural quality but is worn out. It's put through an entire process in which it gets a completely new tread and completely new sidewall rubber. So that is what retrading is. Now, the retrading industry is almost 50% unorganized. With this rate rate cut that has been announced, GST rate cut, the organized players' pricing will also go down, and that will narrow the gap between organized and unorganized pricing, and that could perhaps lead to a gain in the market share of these organized players. Now, a couple of these players like Indag Rubber are leading players in the retreading market, so they could benefit from it. But some of the other companies as well, we're watching out for the MRFs, the CL, all the organized players basically. There could be a bit of green over there.
All right. Good to hear some green. There's always Christmas tree for Christmas. Rima, Infosys as well.
Well, Lata, for Infi shareholders, this Christmas gift could actually come in January, because there are reports which suggest that the company is likely to do a $1.6 billion buyback. Now, there has to be a one-year gap between the last buyback and the next buyback. Now, this moratorium of 1 year actually ends in December, which is why the street expects that on 11th of January, when the board meets for declaring the numbers, they were also likely to announce a buyback. Now, the size of $1.6 billion. Now, where do we get that number from? If you look at the company's capital allocation plan, they had said at the start of the year that 70% of the free cash flows will be given out via dividend. But over and above that, the company will hand out $2 billion, of which $400 million will be via special dividend and $1.6 billion will be as the board decides, which now the street expects could be in the form of a buyback in January. So for our Infi, the Christmas gift could be a bit delayed, but this is of course reports, but widely expected by the market.
Okay, thanks a lot for that. Well, as a Christmas gift for our viewers, we have Nimesh as well, who's going to tell us what he's watching. He rarely appears on Top 10, but today is Nimesh's special. Nimesh, what do you have?
Well, Sana, I'm just trying to fill in for Nisha. She broke the story on Friday that Bandhan Bank is looking to buy out HDFC's stake in Group Finance and merge with itself. Logically, it makes a lot of sense because Bandhan promoters has to bring down the stake from 82% all the way to 40%. So with this merger, they'll be able to reduce close to 22% of the stake. Few concerns raised by the markets. One, of course, is the fact that Group is trading at a very expensive valuation. So if Bandhan has to buy at this valuation, it will be a bit of a red flag for Bandhan Bank. And the fact that if the merger goes through, HDFC will end up owning more than 10% in Group Finance, in Bandhan Bank at current valuation. So these are the two red flags raised by the market. But officially, post our break on Friday afternoon, post markets, there were responses from both Bandhan Bank and HDFC. None of them have denied the story. At the same time, they've said that they keep exploring organic and inorganic opportunities. So no denial from any of the parties. But it looks like logically it makes sense for Bandhan Bank. But in the near term, Bandhan Bank could be in red because of the fact that they'll be buying at a very high valuations, and green for HDFC because they get an exit at a very, very decent price for Group Finance holding. Yeah,
provided it happens. Let's remember this is an evolving story and people are in discussions, so discussions may fructify or not. Okay, let's get to the wellness companies. Ekta, Sun and Spark.
Yes, absolutely. Well, both those stocks would be in focus. The news about them receiving approval for Ellipsia, which is basically an anti-epilepsy drug, came out on Friday afternoon, but Morgan Stanley has written on it. They said that the market size of this particular drug is $105 million. Remember, it is an approval which is coming from the Halol facility of Sun, and peak sales for both of these Spark products, which are in license to Sun, which is basically Ellipsia as well as Zelpros. They've received approval in the past 6 odd months for both of these products. It can potentially generate peak sales of 50 to 75 million in the next 2 to 3 years. Lupin will be in focus as well from the pharmaceutical space. They're holding a media call today, Lata, at 11 a.m. for a strategic announcement. So that stock should probably be in the green ahead of that.
Yes, we got that. We are going to miss you on trading hour when you're listening to the Lupin Con call. Okay, Nigel, why are you watching Vedanta?
Well, last week, Lata, it was good news for Vedanta because we had the NGT order that said that they can go ahead and they can start the process of reopening the Tuticorin smelter. Now, this weekend, there's bad news because the Madras High Court has stayed that particular order. They've rolled back their order and they're saying that, in fact, it cannot be opened because there were a couple of activists that had gone ahead and had appealed against the NGT order. So, not great news coming in for Sterlite. But just to note that last week itself, last Monday, we had Sterlite Copper Management who told us that post receiving all permissions, they'll take around a month to around 2 months to reopen this smelter. Now, that's not going to happen. And most analysts hadn't factored in any kind of number coming in from this smelter for FY19. So now it remains to be seen whether in FY20 it's reopened or not. Just a quick word on the stock price. Last Monday, the stock was at around 220 rupees. It had opened from around 200 to around 220 odd. Now, in fact, it's back at those levels itself. So the stock as well hasn't moved much in spite of that good news. But the stock today will open up in the red.
Why didn't you say ho, ho, ho?
Nigel, where is the Christmas cheer? I remember a couple of years back you dressed up as Santa and now you're refusing to say ho ho ho.
Oh, ho ho ho. Oh, those are the days, good days.
All right.
Oh, come on, Nigel. You're just a young father and he got us marzipans anyway.
Absolutely.
Yeah. This is the best Christmas for him. I mean, forget about the old days. But we have two of Santa's cutest helpers coming up now. Anisha is going to tell us what stocks we have to watch today. Anisha?
Oh, well, yes. Thank you, Sonia, for that. Well, the Christmas green might lend its shade to NLC India today because the company has informed exchanges that they're looking to expand capacity by 1,000 megawatt. And this is as a replacement to the old plants that they're retiring. So, sentiment positive there. Sentiment positive for GVK as well, where an unverified report suggests that the company is in talks with JM Financials to refinance 1,400 crore worth of debt that they had taken from the likes of HDFC, Yes Bank, etc. Now, remember, they have a total debt of around 12,500 crores, and this is for the airport business, so it should go down well. Lastly, a tad bit of red, and that is for Tata Sponge, perhaps, because ICRA has actually downgraded the long-term rating to AA negative, so watch out for that stock today.
Okay. Well, here's a senior citizen Santa before the other little elf comes on. That's me. Well, I would watch out for what's very obvious. With $53 of crude per barrel, we are going to see some more positive perhaps for oil companies and airlines and paint companies. About the inflation sensitives, I've taken that as the second line. Maybe there'll be some more positive for NBFCs and banks that are getting capitalized like Bank of Baroda and Punjab National Bank. But we'll have to wait and see because beyond a point, the rupee may not listen to the fall in crude. So I'm a little iffy about banks have also some advantage from the GST service charges on Jan Dhan going away.
Okay, and finally then we saved the best for the last, right? Sonal is here for some stocks in the news. Sonal?
Good morning, Sonia. Thanks a lot for that. And all the stocks that I'm tracking should see some green today, absolutely going with the dress that I'm wearing. Starting with Petronet LNG, well, the company has restructured its LNG pact with RasGas in Qatar. Earlier, they had to buy, store and transport the LNG that they were getting from Qatar. Now they have changed the terms of the contract and they will only store and transport this particular LNG and will not buy it and supply it to IOC, BPCL, GAIL and GSPC with effect from January 1st of 2019. Other stock that I'm watching out for is Minda Industries because the board has approved the acquisition of magnetic speed and position sensors from Sensata Technologies and the cost of acquisition is around 33 odd crores. Unichem Lab will also be in focus because they have received an approval from the US FDA for one of its drugs. So that is a positive news coming in for Unichem. And GE Power also should see some green because they have been awarded a hydroelectric project in Malaysia amounting to 670 crore rupees. So positive news coming in there as well. Back to you.
Okay, thanks a lot, guys. It is now beginning to feel a lot like Christmas after you guys have lit up our screens. Well, here's a quick recap of our top stock to watch. Stocks with positive news flow this morning. PVR, Inox, JK Tyre, SEAT, Indag, Rubber, Infosys, HDFC, Bajaj Finance, India Bulls Housing, Sun Pharma, Spark, IOC, BPCL, HPCL and Asian Paints.
And she's making me read more positive news flow. Berger Paints, Asian Paints, NLC, GVK Group, Petronet, LNG, Minda Industries, Unichem Labs and GE Power. But some stocks with positive possible negative news flow. Bandhan Bank, Guruf Finance, Vedanta and Tata Sponge.
All right, let's take a quick break. On the other side of the break, we'll tell you how to approach the F&O expiry week. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be with us.